It's easy also that when everything is fearful to dump everything and be scared because of that. A lot of investors have regretted it, that to sell when everything is fearful, they get out of emotion, and only to see it go up, only to see it rebound, and only for it to not be the way they wanted to go. If they just held on to it, if they didn't panic, they would have been at a better position. Hey guys, so in this video, I want to talk about and discuss real estate. I've been talking more on real estate and been guessing some people about real estate. I've been getting a lot of questions about its risks. People have been segmenting it as something that's safe. Allow me to give you a very, very balanced approach in this. I'm sharing from a experiential, practical point of view, and some of this also from a registered financial planner point of view as well. When people say that the real estate market or real estate is something that is low risk in comparison to the stock market, the crypto market, NFTs, starting your own business, real estate in general is of lower risk, but it doesn't mean that it's not risk-free. I've also seen people lose money in it. The main goal of this is so that you can make wise financial decisions with your money, because at the end of the day, that's what matters the most, that you get to decide on an investment based on the level of conviction that you have, based on how much you know, based on also if it's something that fits your financial plan as well. What's nice about real estate is that it's not liquid, meaning in the stock market and the crypto market, because it's so liquid that prices fluctuate minute by minute or even second by second basis. It's easy to be emotional, it's easy to panic, it's easy to be scared, it's easy to somehow make decisions that are a bit rash. It's easy also that when everything is fearful to dump everything and be scared because of that. A lot of investors have regretted it, that to sell when everything is fearful, they get out of emotion, and only to see it go up, only to see it rebound, and only for it to not be the way they wanted to go. If they just held on to it, if they didn't panic, they would have been at a better position. It being not so liquid also is one of its disadvantages, that I've seen people, there were certain things that happened in their financial life that they needed to sell, but because it wasn't liquid, it hit them financially. It took years before they got to sell the property that they wanted to sell as well. So I guess when I say this also, you have to put it with a grain of salt also, that when you invest in real estate, when you want to sell it, you have to realize that maybe it doesn't get sold that fast, even if it's in a very, very good location, even if it's at the center, unless you would want to sell it at a lower price. It's good in a way that it's not liquid, it doesn't force you to panic. And the flip side also, because it's not liquid, when you need to sell, you need to have like a longer buffer. Maybe in my opinion, you have to at least have 6 months to 12 months as a buffer for you to have at least enough time that by the time you need the money, get to sell it without being pressured or even selling it lower, so you get the best deal possible. So that's one. Number two is this, if you get a loan, I think that's one of the things that you need to consider, that if you get a loan, you have to make sure that you know your numbers. You have to do the math. When I say you have to do the math, you have to make sure that what you're paying for the loan will be lower than the rent that you would get as an investment. What if you plan to live in the real estate that you plan to buy? Then at least in my opinion, it's an asset, but it doesn't become an investable asset anymore because you're living in it. Maybe what you can consider there is the amount that you would pay for rent versus the amount you would pay for amortization. You can do the math also and borrow. You can make sure that the rent compensates for it, then it's okay. And you get to have the ability to leverage, especially if you are in areas where real estate is cheaper, or at least borrowing is also cheaper. I think that would be something that would be advantageous. But the risk there also is this: what if there would be months that someone wouldn't rent from you, and then you're paying out a loan? Then that would drastically hit your revenue, that would drastically hit your return, then that would add to your risk. I've seen people where over a stretch period of months and weeks and even years that no one would rent from them, and they ended up losing more money. So the advantage of people paying in cash is they have more staying power, that even if people won't rent from them, they have the ability to be able to withstand it because their cost is lesser. They're not paying something on a monthly basis. But again, from a leverage standpoint, you have the ability to be able to get more with borrowing. So but again, every time you borrow, you add a level of risk. Every time you don't borrow, also you somehow taper off your ability to be able to have a larger market exposure. Number three, I think what's important is you need to know your target market also, because you need to know your battle plan. If you're flipping it, living in it, or if you're also having it rented out, or if you're the type of person that wants to actually fix it and then maybe sell it at a higher price later, or also find something that's really, really devastated, fix it and then rent it at a higher cost. Or you also need to battle plan. There's a lot of styles. Are you the type of person that will put it near universities? Are you the type of person that wants to put it outside? So one of the things that's so important is you need to do your homework when you start doing this. It's very, very important that you study, because a lot of people also lose money just because they think it's safe, just because they can't lose money on all of this. That's why they enter real estate. Your risk becomes bigger when you borrow. Your risk becomes bigger also if you don't know the numbers. Your risk becomes bigger also if there are vacancies. And then I guess if you're the type of person that wants to flip it, or you're the type of person that wants to fix it up also, if you're not too good in all of the things that happen in between, of course it will eat into your cost also. And if you're the type of person that wants to buy something that's already fixed, that's already complete, that's already done, the pitfall of that is you're buying something that's more expensive. So again, it goes back to the numbers that you want to have as well. If you're the type of person that doesn't want volatility, you're the type of person that wants to either land bank something and just hold on to it, then I think the real estate market is something that will work. But please do know that it's not something that's risk-free, that you don't have a chance to lose money. It's not something that's been scot-free. It doesn't work that way. Do your due diligence. Focus on something that you know that you could be an expert on also. And then maybe start on smaller deals, smaller projects first to minimize the risk. Don't go all in. Don't go big or go home quickly, because if you go in one go, it could possibly hit you. I guess from a rental perspective, I just want to say this, that have a degree of marketing and customer service too, because there will be a lot of marketing and customer service involved, and it also depends on the people you're working with, how you interact with them. I think that plays a big part also on all of this, and how you relate with people, because if you don't relate with people well, people think that it's something that's passive, but it's really not. Also, there could be checks that would bounce, there could be checks that wrong spelling and you have to come back for it. Also, there could be tenants that have attitude problems. Also, there could be people also that tenants that may destroy your property. So there's a lot of things that you need to consider in all of this. But I guess what I want to share to all of you is not to come in blindly. Manage your risk, know what you're getting into, realize that it's not risk-free, and we're about to fly. That's it for now. Marvingermo. I hope this really helps you trade well, trade strong, trade smart. See you all again soon. God bless you all.